Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto market. And for those who like to read the blog, obviously you can read it yourself. Ar.ca/blog comes out every Monday and has been for basically 8 years now. So honestly, pretty, not the most exciting week coming off of the week before. That obviously was incredibly exciting and certainly negative for crypto. But really, what we talked about this week and what we're thinking about is like, where do we go from here? Right now that the market is starting to thaw a little bit, but still massively underperforming what we're seeing in the equity market and gold and everywhere else. So the question is just, is it safe to resume buying after the shakeout? Broadly speaking, I think the shakeout of a week and a half ago looks more like a reset than a total collapse. Um, Certainly it wasn't without pain, especially for levered traders on October 10th, when digital asset prices snapped, a lot of pegs broke, exchanges, especially Binance, had major trouble, a lot of liquidations, record liquidations. But by Monday of last week, we already started to see a meaningful bounce underway. Bitcoin was up about 115,000. ETH and Sol were up 10% each. Trading volumes registered a pretty high week-over-week uptick. And then, of course, we had more negative news, a second macro bomb coming. So if the first leg of the crypto sell-off was triggered by Trump's hard stance on China, the second was sparked by stress in the regional banks. We're not going to go into major detail here, but certainly a couple of defaults and a little bit of fraud happening at some of the regional lenders, also permeated into some of the bigger investment banks like Jefferies and JP Morgan. But ultimately, the question anytime this happens is, was this the reason crypto fell? Of course not, right? Crypto is not necessarily super highly correlated to regional banking lending issues, nor is it super highly correlated to Trump and China. It's just that, anytime you're running hot in a market, any sort of negative trigger can certainly send prices lower, at least temporarily. And then what you look for after that is, did anything break, right? And from what we've seen now over the last week and a half post that crash is, it doesn't really look like anything broke, right? Liquidity is already returning. Participation is already starting to return. Interest is building. We're seeing open interest rise. We're not seeing, massive amounts of shorting or puts being bought. So the exchange ecosystem isn't dead. The on-chain derivatives plumbing hasn't collapsed. It's really just, a price decline and a levered washout, similar to what we've had, at least 15 times now over the last 8 years. Even on the macro front, you're already starting to see the VIX start to come back down after the regional banking issues last week. So the VIX is starting to retreat. Credit spreads are totally coming back in, right? High yield bond spreads went from 270 out to 320. They're already back below 300 as of writing this. The 10-year is comfortably kind of hanging in and around 4%. The regional bank ETF, KRE, bounced back on Friday. A lot of people were freaking out about the Fed's standing repo facility, the SRF. But even after 2 days of heavy borrowing there, it fell to zero on Friday and Monday. No borrowing, of course, means less immediate stress with the banks. So, with that in mind, we've got basically a Trump headline, which we know is wishy-washy. We have a macro tape bomb in terms of some regional bank lending standards, which has already kind of cleared itself up, at least in the short term. And on top of that, you have continued kind of record earnings in the corporate market, with about 10 to 20% of S&P 500 firms reporting earnings already. It looks like we're growing at about 10% year over year. So again, you got kind of a perfect storm in terms of crypto investing here right now. You have a massive leverage washout. All the pipes still work. The DeFi protocols work fine. The exchanges are running. There was no major market participants that got hurt or carried out. Similarly, the macro stuff, a couple of days of hiccups, but nothing really earth-shattering or life-threatening or system threatening in the traditional bond world and lending world. And now you look ahead and you say, okay, well, there's still some pretty broad macro tailwinds, right? The bond market's now pricing in 100% probability of a Fed rate cut at the last two FOMC meetings, one of which comes next week, the other one in December. You've got a lot of these geopolitical risks starting to de-escalate again already. You're starting to see a little bit of a blow off top here in gold. As I'm talking here, gold's down about 6%. So obviously it's up 60% on the year. So down 6% in a day, not that big of a deal, but still the biggest one-day decline in gold ever. And we're starting to see a little bit of a rotation out of gold into Bitcoin as a result of that. So the question really in my mind is not like, are we going to keep going lower? Because there's not really an impetus for us to keep going lower. The question is there any actual news on the horizon that will take us higher? And that remains to be seen. We've seen this song and dance too many times for a single blip to make us incredibly bearish. It doesn't seem like this is just a dead cat bounce, but we're not out of the woods yet, right? We still need to see some real expansion, some real money coming into the system. We need to see some more crypto news and idiosyncratic positive events happening in crypto for maybe the buying to resume. But it does seem like the selling has stopped. And again, I think this will just be one of many blips that we've seen on the radar over the last decade or so. So I encourage people to look at the blog if you want to see some of the charts supporting what we're saying here. But like I said, pretty muted week of trading here. And we'll see what it looks like as we end October and head into the last 2 months of the fourth quarter. So that's it for this week, guys. Appreciate your time as always, and we'll see you next week. Thanks, everyone.